Hello and welcome to Market Open Direct Connect, a webinar series for companies to tell their story, why it's compelling and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by David Prentice, the Managing Director of Brookside Energy, ASX code BRK. David will provide a detailed update on the company's September quarter and also participate in a Q&A. A recording of this webinar will be made available on Market Open and Brookside Energy's website and social media channels within the next 24 hours. And I'd like to introduce our guest, David. Welcome to Direct Connect, and over to you.
Thanks, Stuart. Nice to be with you again for the quarterly update, and thank you to everybody who's taken the time to join us. I've got a presentation here that I'll flick through just to run through in the same format that we did for the last quarter, just to give everybody that perhaps hadn't had a chance to look at the quarterly in detail, to give them a bit of a run through. As Stuart said, at the end of that, we'll run through a bunch of questions that we've received in the lead up to the webinar. So looking at, obviously we've got the notice and disclaimer here, so obviously take your time to read that. We've got the reserves cautionary statement, also important, so take your time to read through that. And then obviously looking at the results for the third quarter, another pleasing quarter for us. Obviously cash receipts 5.5 million, delivering up positive operating cash flow of 1.6 million. So the business is continuing to run very well. Cash inflows of 10.1 million offset against the FMDP related capex of 13 million. So it left us with a very strong cash balance at the end of the quarter of almost $14 million, with most of the FMDP expenses running through the system already. So leaving us in a really strong position. Net production for the quarter, just a little under 1,100 barrels of oil equivalent, 65% liquids, and that was despite the flames and the dual wells being shut in for significant periods during the quarter to protect against offset completion activity, most of which was related to our own activities in the FMDP. So you can see there the flames well was shut in for 90 odd days during that work. So very pleasing result to see that production in light of those extended shut-in periods. And obviously super pleasing, the 4 Swish wells were brought online towards the very end of the September quarter and delivered up some fantastic early production results. So they've produced, sorry, I've jumped ahead of myself there, just looking at the 4 Swish wells. So yeah, the 161,000 odd barrels of oil equivalent from the 4 reserve definition wells, and bringing the cummed production to the end of the quarter to just over 2 million barrels of oil equivalent. So those first 4 wells that we drilled, our reserve definition wells, have done very, very well. And then jumping on to the FMDP. So as I said, those wells coming online in late September have produced now 164,000 barrels of oil equivalent during the initial flowback period, and a combined spot rate of 4,300 BOE per day in that early period. So very pleasing early results from the FMDP. We'll talk more about that as I get further into the presentation. The Continental Resources Gap Stour full field development is also nearing flowback and testing. So the completion operations were finalised during the quarter, and we're expecting production in the fourth quarter of 2024. And then on the strategic side, we announced the successful securing of that $25 million credit facility with UMB Bank on very attractive terms. So that's a great result for the team here in the US, and we also announced the fact that our US listing process has commenced. So a very busy quarter, a mix of, I guess, operational performance and some strategic objectives that will pay dividends going forward. So just moving on now to the numbers. So for the first time this quarter, we included, I guess, a quarter-on-quarter comparison. So you can see there, group net production for the quarter basically up a little bit, but basically flat with a slightly higher liquids content. Gross operated production, again, very similar. Quarterly sales, so down a little bit on the previous quarter, mostly as a result of pricing. And then you can see the reconciliation of opening cash operating income. Net CapEx, so that's net of capital that we collected from our working interest partners in the FMDP. And then we had obviously exchange rate movement, leaving us with our cash closing at the end of the quarter. As I say, very strong cash position with most of the capex for the FMDP now having flowed through the system. So looking at the production from the 4 reserve definition wells, so that's all on trend. The wells are all producing as modelled. You can see there the flattening out for both the flames and the dual well as a result of that shut-in period that I talked about in the introduction. So all in all, very pleasing performance from those wells during the quarter. Then on to the actual production and cash flow table. So you can see there again, gross operated 166,000 barrels of oil equivalent, group net volumes 98,000, and you see that liquids contents remaining high. Gross operated production 1,800 barrels of oil equivalent per day, and the net just under 1,100. Repeating again the cash sales and leaving us with that strong cash position at the end of the September quarter of just under 14 million. Cash expenses 2.9 million, of which only 0.3 or 300,000 was production expenses. So our low operating expenses are continuing to really drive the profitability here. 2.6 million in payments to working interest partners. So that's just us redistributing royalty owners and working interest partners their share of revenue that comes in. Staff, admin and corporate costs were down a little bit quarter on quarter, which is obviously good. And then, as I said, CapEx net of payments in from working interest partners, 8.6 million. And again, primarily that was associated with drilling and completion operations. So both our contribution to the Gapstow as well as the FMDP related expenses. So moving on to the FMDP, we touched on a little bit of this in the last quarter, but obviously very pleasing to get the wells drilled and completed ahead of schedule without any lost time injuries. The wells have subsequently been stimulated and completed for production, and late in the quarter were brought online, and they're now cleaning up and steadily improving. Approximately 10.6% of the stimulation fluid used in the completion operations recovered. So if you're going to think about these 4 wells as really being, we've injected an enormous volume of fluid into a relatively small area in 4 wells at the same time, and we're flowing them all back at the same time. So very pleasing to see particularly the strong early liquids performance that we've seen, with such a relatively smaller volume of stimulation fluid recovered. So as I said in the introduction, and announced this morning, 164,000 barrels of oil equivalent, very high liquids content in this early flowback period. We're still testing and optimising the flow regime across all the 4 wells, and it already generated that combined gross spot rate of 4,300 BOE per day. We've also had some joy on the spacing and pooling front, and you can see there some modest increases in our working interest across the 4 wells, which is obviously pleasing. So all in all, this has been a marvellous venture for the business, and really set us up to be able to move seamlessly into 2025 with the confidence to continue to develop these Swish AOI reserves. So very pleasing result. So on to the Gapstow. I touched on that before. You can see on this new map here on the right-hand side where Gapstow sits in relation to the 3 northernmost northernmost Swish DSUs. You can see the wells drilled there. Obviously, we are participating as a non-operated working partner with Continental Resources. We understand from the reports we've received there that the drilling and completion operations have gone very smoothly out there. And we're looking forward to seeing some flowback data early in the 4th quarter. So and again, that will add another 150 odd barrels of oil equivalent over the initial 2 years net to us. So another really strong contributor to our to the business. And then finally on to, I guess, corporate activity and some of the more strategic stuff. So as I said in the intro, $25 million credit facility in place with UNB Bank. So absolutely delighted to be partnering with the UNB Bank. We've got an initial borrowing base of 8.5 million on very attractive terms. So you can see there, Wall Street Journal prime rate plus 0.5%. So, interest rate of 8.5%. Having that facility in place to help us to smooth out cash flows going forward and take advantage of any growth opportunities that come along is obviously fantastic, and we've really enjoyed working with the team at UNB and looking forward to a long and fruitful relationship with them. On the US listing, we've gone ahead with that initiative. Really, that's about sort of trying to address, I guess, demand that we see from US investors that we've had sort of inbound expressions of interest from US investors who know where our particular, know where the Swish play is, know a little bit more about what's going on in that part of the Anadarko Basin, and are really looking for what they see is a fantastic sort of, I guess, valuation gap opportunity. So giving them a security that trades in their time zone and in their currency is something that we hope will really improve the liquidity for the stock generally across the board, both here in Australia and in the US. So to advance that, we've gone ahead and appointed a bunch of advisors. So that's kind of legal counsel, investment banks, accountants, what have you, to move forward with the regulatory and financial requirements that we need to put in place to lodge the documentation with the SEC to get that done. Obviously, as I said, we'll retain our primary listing on the ASX, and the ADRs will be representing that underlying stock. But we're really hopeful that as we increase liquidity here in the US, that we'll see, that have the effect of increasing liquidity in Australia as well. In terms of the timetable, we're looking toward the end of the first quarter of 2025 to have that work completed and be listed and trading our ADRs here on NYSE Amex. And then finally, we completed the consolidation during the quarter, 1 for 50, so leaving us with just a little bit over 96 million shares on issue, fully diluted at the end of the quarter. Some of you will have noticed there was a typo in the quarterly report that showed that the top 20 holding 35%. So on a fully diluted basis, the top 20 actually holds 32%. So with that, Stu, I will turn it over to you for questions.
Dave, thank you. Another impressive quarter. So congratulations to everyone. As you said earlier, we have had some questions come in, so I'll go through those now. Why is it always rushed communication in these instances? You've held webinars before, it only gave bare minimum for shareholders to put questions together. It reflects poorly on the company's openness and communication skills, almost underhanded. How has this been addressed moving forward?
Yeah, so look, I think that's a little unfair, to be honest. We've been running these quarterly webinars, regularly for at least 12 months, and we, kind of run them as soon as we can after the end of the quarter. We're doing our level best to be as open and as transparent as we can with our shareholders. We've got the investor centre there where people can, it's available 24/7 for people to ask questions, and we try to get back to people as quickly as we can, sort of usually within a couple of business days to their questions. So I think we're doing a pretty good job at trying to be responsive to people's questions. I mean, my email address and contact details are available to anybody, and I often get questions and respond to them in real time, and take phone calls from shareholders from time to time. So I think we're probably class leading in terms of our access and openness to shareholders.
Whilst every effort has been taken by management, which no one can deny, still the share price languishes, which, although to be expected, is disappointing. What else does management have to offer to create shareholder value? It seems to be a common theme across the board, presentations, webinars, on the web page, but they haven't seen any value added yet.
Yeah, it's frustrating. I mean, every quarter for the last 12 months, we've been frustrated by this this stubborn disconnect between our share price or the market capitalisation of the company and what the underlying asset value is. And I think I've said on many occasions, in these in interviews and on these webinars that this is not a phenomenon that is confined to just Brookside. This is, we're seeing globally across the board for oil and gas companies generally that they're trading on historically low multiples, and we're no different to many of our peers. But it is frustrating. We get that, and so some of the initiatives that we're putting in place. Look, the US listing is about trying to find a bigger pool of investors who understand the business and perhaps see the opportunity here in terms of the valuation gap. We can't control the share price, but what we can do is continue to push hard on these strategic initiatives, which are designed to try and bridge that gap. And honestly, things like share buybacks, which we've said are going to form part of our capital allocation strategy going forward, are things that we are always considering and have there as part of the mix. If we see these periods of continued underperformance of the share price, having those tools available is important too.
David, does management see a payday for long-term shareholders closer than 28, 29, keeping in mind the payments to Black Mesa in 2025 and then investment into the FFD? Will 25 be another extremely lean year?
Oh, certainly not. No. So we haven't finished 2024 yet. I expect 2024 to be another good year. I mean, that we will have strung together, 3 years of net operating income, positive net operating income, in fact, profit after tax, which for a company of our size and is just remarkable. So we're really putting together a pretty strong track record here on the financial side of the business and on the operating side of the business. 2025 should be our very best year. I mean, the only caveat there is, I've got no control over what happens to commodity prices, but 2025 should be our best year so far. And then we only continue to get better from there, right? So I think that's the sort of the framework that we've laid out for shareholders, with the one caveat to say that, look, if we see these prolonged periods of time where the valuation is just stubbornly not reflecting the underlying value, then things like buybacks is a tool that we can use to try and bring some of that value forward for shareholders. And where the board is absolutely alive to that and is certainly considering that as part of the mix for 2025 and beyond.
One regarding director investment, is there going to be any? Always throws out faith to observers when management backs a company, especially with what seems to be in the pipeline.
Yeah, so that's a really interesting one. We've got one of our directors has got like 80 odd million shares that they've bought on market. The rest of the board has contributed in pretty much every capital raising that we've ever done, and in recent times, two of us were actually actively on market buying shares. So I mean, I think yes, we do buy shares. Yes, we're frustrated about the share price as much as anybody else, and yes, we see the value gap and from time to time, take advantage of it. I mean, there's obviously periods of time where the board can't trade the shares, but where the opportunity presents, we certainly do.
The ADRs are American listing, so the understanding is a bank or facility purchase the shares on the ASX. Has this purchase taken place? Does the institution who will sponsor already have their allotment, or are they yet to purchase? If so, is these top 20 holders? If not, when would this purchase occur?
Yeah, so that sort of, I guess shows a bit of a fundamental misunderstanding of how the process works here, right? So basically, once we have these ADRs up and running on the New York Stock Exchange AMEX board, then people will be able to buy and sell the ADRs. Okay. Now, what happens at that point is a market maker and a custodian bank in the United States has to buy the equal on whatever ratio that ends up being in terms of shares to ADRs. They need to make sure that they've covered that trade, right? So they need to the market maker and then ultimately the custodian bank that holds those shares. The market maker has to stand in the market in Australia, buy the shares, so that they've got that stock on the custodian's account to cover the trades that are happening in the ADRs. So none of that will happen until we've got the ADRs up and listed, which will be, as I said, hopefully towards the end of the first quarter of next year. So there's no actual allotment that happens to the US investors. It's just a matter of once we start to get liquidity in the ADRs, then the market maker needs to wade into the market in Australia to buy shares to sit behind, or if you like, to match those trades that are happening in the ADR market.
David, when are you going to announce the plans for next year?
So look, we're working on that now, and we're close to pulling all of that together. So certainly before the end of the year, we'll have something detailed out to the market. I'm guessing it's going to be early in the early in sort of December is when I'm expecting we'll be in a position to kind of lay out what 2025 looks like. What some of the strategic initiatives that we've got on the go, how that interacts with the 2025 plan.
A long question here, so bear with me. On December 13, 2023, when announcing the transformational FMDP drilling program, you've also announced you'd be seeking shareholder approval in early 24 for a further buyback beyond 10% in the 12 months limitation to commence upon the completion of the FMDP. This was also reiterated on January 9th, 24, when the original buyback was finalised, and additionally also announced that shareholder approval would provide flexibility to consider an earlier start to the buyback if the capital requirements allowed. In the December 23 quarter, the company again stated an intention to seek shareholder approval in early 24 for the further buyback beyond the 10% in a 12-month limitation. As this was announced 3 times, why was the shareholder approval not followed through?
Well, the plan's changed is the answer to that. I mean, I guess, when you take a step back and have a look at the capital allocation decision and look at how much capital was required for the FMDP and what our ultimate exposure was going to be to that process over I guess the period from sort of February of this year till when we've just now finished the completion. We needed to make sure that we kept the balance sheet in good order, so that in the event that we had cost overruns or any kind of issues, that we were well covered in terms of that, and also making sure that we've got cash available to take advantage of opportunities that might come along from time to time. So that's the tension that the board is always dealing with, is saying, okay, well, we understand that a buyback is probably a very, very clever strategic tool to use at this time when the shares are trading at such a steep discount to the intrinsic value. But we've also got to balance that with, okay, making sure that we don't get in over our skis in terms of these big capital programs that we've got underway. Obviously now we've finished the FMDP, so that's a tick, and then have enough capital available to be able to respond to opportunities as they come along. And putting the facility in place with UMB Bank has been another strategic sort of string to our bow there. So I think the answer is we like buybacks. We think they're a good idea. They'll always be part of our mix going forward. It's just a matter of timing and making sure that we maintain enough flexibility in the business so that we don't stretch ourselves and leave ourselves with a gap.
David, what was the October FMDP gross production and all well production rates still increasing?
So it's too early to call really for us to give too much colour on that. As I said, the wells are still cleaning up. We're still tinkering with the flow back regimes. We're looking at the gas to oil ratios. We're monitoring it all very closely at the moment. And I'd sort of please our shareholders to keep in mind that, this is a big undertaking. This is 4 very large wells, all completed at once and flowing back at once. So you can imagine, there's a fair bit going on out on location. But what I can say is that, as we announced today, fantastic initial period of production. The wells are very strong, and we're very pleased with what we're seeing. We just need some more time, before we're in a position to sort of provide any more colour on, peak rates and the like. But everything's going very well.
Do you have any indication of how much of the third-party working interest funding will be paid from the production joint interest billing, and how long will that take to collect?
So we're starting to collect that already, right? So in terms of the percentages, we did collect a large proportion of that capex up front from some of those working interest partners who we had arrangements with to collect that capital up front. Other smaller working interest partners who are being paid through the joint interest billing process, that just gets netted off their revenue. So we give them a statement that shows what their revenue for the month was, and then we net off any capex that's owed to them. So with that process of doing that, we're right at the first month of doing that right now.
When will the FMDP working interest determinations be finalised, and do you expect any increase in the Brookside Sycamore working interest?
Again, that's a moving feast. We're hopeful that we'll mop up some more, but I've got no sort of specific detail that I can give to people on that front. So we just need to work through the process. We're now working through the process with the title attorneys to firm up everybody's interests and make sure that we've got it all right. And we're certainly hopeful that there'll be some additional interest to pick up along the way, but not able to give any more colour than that.
Is there any news regarding the Gapstone development, and have Continental Resources commenced flowback yet?
So I think I covered that off in the presentation, Stu. So yes, the wells are completed, and we're expecting some news on that in the fourth quarter. Okay,
this is the last one that's come through. Could you please advise what obstacles there are to conducting an on-market buyback? 10% buyback could cost approximately 4.5 million at the current share price. Given the current share price, oil price, and loan facility in place, this would appear to be the best use of company funds at present.
Yeah, so agreed. So look, whether it's 10%, whatever that number is, obviously we're working through that with the board now. But I mean, again, it's in the context of what does the 2025 development program look like, and balancing balancing our cash requirements with the requirements with the cash requirements for a buyback. As I've said consistently all the way through, we think buybacks is a really useful tool, and it will be part of the mix going forward. When it starts, what the quantity will be is really all going to be part of that discussion that we're having as we're finalising the 2025 budget. And I guess I make the point that okay, it's that's fine. We can allocate some capital to a buyback. We can look at what the capital requirements are of the business in terms of continuing to develop up the acreage. If prices continue to soften, we need to have the flexibility in the schedule to be able to sort of slow down development if that's the most prudent thing to do. But also we need to be ready to speed it back up again if prices rally. So we've got to keep that flexibility in there. We also got to have cash available to take advantage of leasing opportunities that come along from time to time to expand our footprint. Where obviously we're looking to balance the share buyback with the capex, with the value add strategic initiatives, and get that mix right. And we're working on that now, and that will be part of the announcement that we put out when we finalise the 2025 plan.
David, thank you. That's all that's come through today. Congratulations once again on such a successful quarter for you and the team. We've had some great questions there and appreciate you taking part in this Q&A. For more information about Brookside Energy, you can head to the company website, brookside-energy.com.au, or you can follow the company's social media channels or sign up to the company's investor centre. David, thanks for your time today. Keep up the great work and we look forward to chatting again soon.
Thanks, Stuart.